Good day. Jeffrey Friedman, Senior Market Strategist, RJO Futures. Today, August 22nd, Friday, late in the month of August, one more week to go. What's the word of the day, which represents kind of like the theme? It would be Jackson Hole. And that represents interest rates and the Federal Reserve. And what is their intentions? We'll get to that in a minute. Let's give us some background in the whole month of August and the last week of July. Well, we broke in the S&P future contract about 100 points, which is significant, about 3.5%, 4%. And we rallied in the last 3.5 weeks right back. So we broke about 90 points. We rallied 110. We made new contract highs for the move of a 5-year bull market. We are still in a bull market. Looking at technicals, which we will in a minute, we are bullish, no doubt. And we'll talk about that in a minute. Are we overbought? We'll talk about that in a minute. Let's get back to economics of our reports in the United States. Almost everything this week was pretty darn good. Housing was better than they thought. Initial claims for unemployment claims was better than they thought, meaning it was a smaller number, less people need it. Philadelphia Fed, the Fed's assessment in that region was better than they thought. In general, things were good. CPI, a gauge of inflation, was lower than they thought. So we don't have inflation. We have a lot of stimulus from the Fed still. People are talking about when will the Fed raise interest rates, and could that be crippling to the stock market? Now, I mentioned that we went down 100 points or 90 points, rallied 100 or 110. We're probably overbought, but the momentum is definitely higher and the trend's your friend, in my opinion. Now, have said all that, okay, we went through the economics. What are the highlights globally? China is a little weaker. We saw that is a little weaker. Corporate earnings in America were basically a good driver, and with our economic reports in the United States, Russia could be a problem. It hasn't gone away. There was some dovish talk earlier, but now they have a convoy going across the border. That could be a problem. The Middle East, 2 sectors of the Middle East could be a big problem. We'll see how that goes. So those are your negatives and positives. Looking at the technicals, we just made a new contract high this week in the S&P September contract, future contract. We're around 1990-ish. When the chairman of the Federal Reserve talked today, we were around 1985. We rallied 4 or 5 points. We were negative by 4 points. We're unchanged right now. My projection is probably 1995, minor resistance, and we'll probably power our way to 2015 on the charts, looking at a target, if you will. On the way down, things to look at, minor support, 1970, 1971, 1950 is a better number to put your little circle around. If we close underneath that, there would be damage to the charts, but not significantly. Where you would see the bears take control would be a close under 1925. So obviously 1926, 1927, 1930 is probably good support level, and that's where some of the long-term bulls would come in and buy some more. In my opinion, a close underneath that would be damaging. As always, good luck and good trading. Futures and options on futures may involve substantial risk and may not be suitable for all investors.